Hi, welcome to the Truth in the News with the Real Estate Market Watch. I'm Bob Gibbs, and in today's report, I'm going to talk to you a little bit about foreclosures. There's a lot of talk still about foreclosures and distressed properties in the market, and this is August 14th, and it doesn't seem to be moving any closer to being resolved. In fact, there's more questions now than there were a year ago at the time. So I have some statistics there I'm going to share with you. Number of foreclosure filings, that's where the bank has actually started the foreclosure process on somebody. It's actually down 14.46% from this month last year, so it's down. It's down, 22% from this time last year, and 10%. So there are 10% fewer filings this month compared to last month, and 22% fewer filings this month compared to this month 2010. So less notice of defaults being issued. When it comes to the outcomes of the foreclosures, for those that did have notice of default issues and they're going through the process, they used to cancel them quite often. They're canceling them less frequently now. So the number of canceled foreclosures, that means the bank saying we're not going to do it, is down 37%. So there are more people that are in the foreclosure process that are just kind of sitting right now. The number of foreclosures that have gone through and the bank has taken back the property is down 20%. That means that there are 20% fewer homes being actually foreclosed on today than there were a year ago, as far as becoming bank-owned property. And this is the interesting statistic. So what we're finding, however, is that the bank may not be going to selling them on the courthouse steps, but the instance of a bank selling directly to an investor or a third party is up 13% from the same time last year. So that's an interesting trend to keep our eye on. If we're talking about inventory of foreclosures on the market, the ones that are bank-owned, that the bank already owned, it's 4% higher than it was at the same time last year. So the banks basically are sitting on more inventory. There are, though, only 20% less that are scheduled for sale. I know I'm going through a lot of statistics here, and I'll make a point of this when I go through this. There are 20% fewer homes being scheduled to be sold on the courthouse steps than there were a year ago. And the ones that are in pre-foreclosure or notice of default issued and stuff is down about 6% from the same month last year. So what does all this mean? So basically what this means is this. The banks have taken a stand right now where they're not really foreclosing on as many homes. As you can see, because inventory is up a little bit, so they do have some inventory they're sitting on. However, instead of going to the courthouse steps and trying to sell them to investors that are bidding on it, they actually have third-party investors that are coming directly to the bank and to the owners of these loans, or the bank investors, and they're buying them directly from them. So we're seeing that happen more and more. And the reason the bank is doing that is it's far more efficient for them to have someone come to them and say, I'll buy this house from you, as opposed to them having to schedule it and sell it at a trustee sale on the courthouse steps. So I think we're going to see more and more of this going forward. The other twist to that is that we are seeing more short sales be approved quicker than they used to. So the bank's getting that process streamlined. So all in all, what I'm finding happening is the banks are starting to get their processes lined up so that they can start processing these things without having to totally foreclose on someone to go to the courthouse steps. So they're promoting more short sales. They're actually taking, for those people who don't want to sell short or just walk away from their home, they're actually selling to third-party investors and not going to the courthouse steps. So what that means is that the banks are getting their processes lined up. What it means for you and I, as people that are homeowners and potential sellers of homes, that, and I've said this for a while now, there's a window here where there aren't a lot of foreclosures hitting the market. And I think that's going to continue for a while. However, they do have more bank-owned properties than they'd like to be carrying right now. So we will most likely see some more foreclosures hitting the market, which is competition to you as a seller. If you're a buyer, there aren't this big onslaught of foreclosures hitting the market. You know, typically when you see something, you're getting it at like a 20-25% discount. So you're not seeing as many of those. You're seeing more short sales, which may not be a 20% discount, but they are still discounted from normal market rates for that area. So a lot of information being passed out, but the bottom line is, if you're a seller, you're going to have a window right now. I would encourage you to take advantage of it, or plan on holding your home for a long time if you're waiting for prices to come up. If you're a buyer, we're going to be in a pretty flat market for a while. Take advantage of the interest rates. They're good. I know this sounds like realtor speak, but it's the God's honest truth, and it's the fact that interest rates are so low right now, it's almost ridiculous. And there are inventory of homes on there that are priced really well, so the affordability of these homes are much greater than it was even a year ago. So I would encourage you to, if you see the home you want and you're buying it to live in it, take advantage of it. Well, with that, just as a reminder that we're here to help you realize your real estate goals and dreams. Make it a great day. Bye.